Could the future of the property market be on the blockchain? Many commercial property agents believe that crypto technology can solve the real-world problems that hotel and skyscraper investors face. I spoke to three major players to find out how the tech that powers cryptocurrency could shake up the real estate market.
And I've seen all kinds of things happen in the space, but this is going to completely revolutionize everything that we've known.
Laura Pamatian is the founder of HEIGHTZERO Real Estate, a consulting firm using blockchain tokens to give commercial property developers access to new liquidity options.
We're getting a ton of traction in tokenization, and not necessarily NFT tokenization, right? Non-fungible tokens, which you hear a lot of, but more on security tokens, right? The security token side of issuance.
Liquidity refers to the ease of buying or selling an asset on the open market. It's a sticking point in commercial real estate, where renegotiating a deal can be expensive and take years.
You have to come to the table with a very large investment, millions of dollars, if you're going to invest in a commercial property. And typically that capital is locked up for years of time, right? 3, 5, 8 years, maybe more. And they don't have the opportunity to trade in and out of that, right? Their capital is locked up, and it's a very high barrier of entry.
Laura is solving the slow speed of commercial real estate investment through a process known as tokenization. Through tokenization, a piece of real estate can be sold to investors in the form of digital tokens. Each token represents a tiny stake in the property, whether it's a hotel, a restaurant, or a skyscraper. This is especially useful for property developers as it gives them a shortcut in the time-consuming world of real estate deals.
Say it's a $100 million asset and that owner is looking for capital, and maybe they need $20 million for a renovation of that hotel, or maybe they need $20 million for the acquisition of a new property, or maybe a new development, right, that they want to create.
If property developers need money for a project, they can use tokenization to quickly raise capital.
If they have equity in that $100 million building, we can actually access that equity through blockchain technology and tokenization. So each investor would come in with, say, $10,000, they would get 10,000 tokens, and then that would allow the developer to then recapitalize.
Developers can use the money they raise through tokenization to fund new projects. In exchange for buying tokens, investors receive a stake in the future of the property.
They could redeploy that capital for, whatever the purpose was, and then those investors now have economic right, interest in the $20 million of that $100 million hotel.
Investors in tokenized real estate stand to benefit when property developers are successful.
Maybe they're being provided monthly dividends, or quarterly, or whatever that might be, or maybe there's just upside. Maybe the interest, the opportunity was just to have an equity stake. And if they want to hold that property for, 2 years or 5 years or whatever it might be, they would have the opportunity to realize potential upside when they were to sell or trade that token.
Tokenization in itself absolutely democratizes the market.
Samuel Grossman is the managing director of real estate at INVENIAM, a firm now handling more than $20 billion in assets. He believes that as well as enabling access to liquidity, tokenization can make real estate deals more transparent.
What we're trying to do is provide better data, provide trust, and provide transparency. And that's what the blockchain does. The blockchain allows the data itself that goes with the asset to travel with that token, to travel with that smart contract on that token. What that does is that, provides observable data forever on an asset. So if you sell an asset, the new buyer has access to all of that information through the blockchain.
He also explained how tokenization increases access for new investors.
It's all about, that's really, in the end, besides liquidity and providing liquidity to illiquid assets, the marketplace itself is increasing the reach. And now anyone given the opportunity, can own a piece of a skyscraper in Manhattan if they want, a retail building on Rodeo Drive, or vice versa. Someone living in Manhattan can invest in a real estate asset in Boise, Idaho.
One of the biggest tokenization offerings to date is the Aspen Coin project.
It's a resort in Aspen, Colorado, that is now successfully trading as a private asset on an exchange.
Yael Tamar, CEO and co-founder of SolidBlock, explained Aspen Coin. Aspen Coin was the first tokenization project on the SolidBlock platform. Just under 20% of the St. Regis Aspen Resort was tokenized and sold to raise funds.
Asset owner, needed more capital to renovate, to increase occupancy, and so on. And so the investors, the existing investors, said that they would invest again if there was a way for them to get some liquidity later on, right? So they didn't want to stay in that asset forever.
The resort was able to entice investors with quick access to their funds when they wanted to move out of the investment.
Imagine that, one day they need to pull the money out, or they need to sell their fraction of the asset. They will go and sell it on an exchange, or they can even sell it to their friend, right, or neighbor, or relative in this wallet-to-wallet transaction. And that's really revolutionary.
Because each Aspen coin is a small investment, they're much easier to sell than a traditional stake in a property like the St. Regis Aspen Resort.
In the Aspen coin case, now the investors that invested in the project were able to exit after a year and a half, right? So, which is unheard of in the real estate space, specifically with landmark assets. And it would take them over 7 years probably to exit.
We are solving the inefficiencies of the marketplace, which is, providing better data, which leads to better value, which allows you to make better decisions. Now, the blockchain play in this process is really the securitization of that data.
I also asked the three blockchain innovators for their thoughts on bringing women into the emerging tokenization space. While many women have enjoyed success in the traditional real estate industry, relatively few have made the switch to this new property market powered by the blockchain. For her part, Yael is tackling the issue of all-male conference panels to make sure that the ideas of women are being heard.
In terms of being a woman in the space, it's amazing that we have a great group of women and that know each other. So I founded this organization that's called Women in Block, or association rather, and we promote women speakers and provide lists of women speakers for conferences to avoid the situation that we call manels, which is all male panels. And and I'm excited to network, always to network with other women.
Samuel agreed that an all-male environment is detrimental. He said that when women bring their perspectives to the table, it leads to innovation.
You don't have both male and females at that round table, you're not going to innovate. You're not going to move an industry forward, especially in a time when we're talking about technology literally changing an industry that was the foundation of what this country's economy was built on.
Laura is optimistic that the emerging market of tokenization offers anyone a chance to get in on the ground floor.
The nice thing about this sector is that anyone can learn and anyone can get involved because it's a very even playing field. If you're interested and it's something that you want to pursue it, because there's nothing that's going to hold you back.